Our brokerages, again, are bullish on Hero MotoCorp. But Pankaj, of course, joins in to talk more about that. Is it a consensus, a bull call?
Well, Tanveer, if you just look at the call coming in, firstly, people are saying that the results are decent. They were expected to be on the miss side, and that's not the case. In fact, the fact that, they have managed to meet street estimate itself is a good number as far as Hero is concerned. The commentary was something which the street was awaiting for, and the management maintained growth rates of 8 to 10%. However, there were some estimates which said that, it could be high double digit, but now that's not the case. The management has come down and said that 8 to 10% should be the sort of growth rate. The management is optimistic about the, festive demand. However, the brokerages have mostly said that they would wait and watch, but at the same time they're also mentioning in that the correction that you've seen in the two-wheeler space is quite sharp and quite aggressive, and that makes a call to go ahead and look at some of these names. Hero, of course, is by far one of the best large cap two-wheeler spaces, what most of the brokerages are saying. The likes of UBS, Macquarie all have a positive rating, but on the other hand you have Morgan Stanley which says that they would maintain their underweight, but again their target price, which is 2,700 odd, is close to where the current market price is. So they are underweight, but they're not expecting a great downside from here on. Let's listen in actually to the management talking about their outlook for for FY19.
I think what we've seen thus far, I think it's been a fairly consistent thing. Yeah, you could say that rural is a little stronger, and as opposed to the urban thing, but it's just about marginally better. But what we do expect is that going forward, given the MSP, kind of scenario that we are getting into now, there is a clear feel that we are getting from the upcountry networks and markets that things in rural will start looking northwards even better. So that just gives us that extra, confidence that things will start getting even better in rural, going forward. So to that extent, right now what is visible is almost a similar situation both. Slightly better in rural, but I think from here on, things could get even stronger for rural.
I have Chirag Jain, auto analyst at SBI Capital, joining in to analyze Hero's numbers first. Chirag, how did you read into the numbers and the fact that the management is not quite confident of clocking double-digit volume growth going forward?
Yeah, so broadly, there are two major positives in the result. Number one, they have been able to sustain their margins in the range of 15 to 15.5% over the last few quarters. And that should allay some of the concerns that investors had with respect to competition and obviously commodity cost pressures and adverse effects. On the other hand, the management was fairly clear that within the two-wheeler industry, finance availability will actually improve rather than reduce, given that they are generally shorter tenures of 2.5 years. These were the two major positives that came out from the result. Obviously, on the negative side, the festive demand start has not been that great, and that's primarily to do with the hike in insurance premium and some confusion around that. But obviously, management is quite hopeful that with now clarity emerging on that front, things should come back to normal, and they are still maintaining that 8 to 10% growth during the festive season. And obviously double-digit growth for the full year FY19. But a lot will depend on the festive season, how things pan out. Obviously, the start has not been that great.
Yeah. So would these numbers then make you rework your price targets or your recommendation on the stock?
Yeah, so because of the hike in insurance premium, we see challenges for the entire two-wheeler industry as such, and that's the reason we have reduced our growth expectation for the two-wheeler industry and consequently for Hero. So broadly, as far as earnings estimates are concerned, we have reduced broadly by 2.5 to 3% for 19 and 20, and accordingly we have reworked our target price. But definitely recommendation remains a buy, mainly driven by valuation. Valuations are fairly attractive at 14.5 times FY20 earnings, which is one standard deviation below 5-year average. So valuation is quite attractive, even though there are near-term headwinds with respect to festive demand, especially because of the insurance hike premium that we have seen.
So, Chirag, if I have to really look at the lay of the land for two-wheelers, can I say that for an investor, two-wheeler stocks should actually be an avoid or at best hold, because cheap valuations will ensure that the downside would be limited and the industry dynamics will ensure that the upside will get capped?
Absolutely, I totally agree with you. I mean, the kind of regulatory changes that we would see over the next 2 years with respect to two-wheeler industry, I mean, right from safety norms coming up in April 19 and BS6 coming up in April 20, along with the recent hike in insurance premium, definitely growth as well as margins would be under constraint for the entire two-wheeler industry. And to that extent, this becomes more of a relative buy. I mean, Hero within the entire space. Obviously, overall space, we are cautious and negative. But Hero more because of the valuation and the limited downside that it provides, it's a relative buy as against an absolute sort of a buy. I agree with your thesis on the two-wheeler space.
Okay, Chirag, glad that you could take time out and analyze Hero MotoCorp's numbers. This, along with Infosys, is going to be a stock reaction to look out for this morning.